Today, we will be talking about three stocks that I'm keeping an eye on for the month of June 2019. Crazy to think that we're already halfway through the year. Just feels like it already just started, but a lot of people predicted a stock market crash, and we have yet to see one. It's been pretty volatile the last couple of weeks, but we'll see where we go from here. This is just how the market did on Friday, mostly down, but there's definitely some green spots. So, not too bad of a day, but let's get into the first stock that I'm going to talk about. But before we do that, be sure to like, comment, and subscribe. Let me know if you agree with my stock market predictions here and if you are buying them or not buying them as well. So, the first stock we're going to talk about here is Delta Airlines. You've probably heard of them, you've probably flown on them. You know, I like the transportation industry just because I think it can out survive a lot of recessions we have because people will always need to get from point A to point B. So, Delta Airlines, it provides air transportation for passengers and cargo in the United States and internationally. It's currently trading at a PE ratio of 9.15, which isn't too bad. It gives a dividend of 2.4%, so you'll definitely be able to keep up with inflation there. And there's definitely been a lot of head scratching with this stock. It hasn't been doing that well in the past year, basically stagnant in the past year. But as the stock struggled in 2018, investors were unsure about what to expect for 2019. And then, of course, Delta had this huge Q1 where they had record earnings and they blew a lot of those fears out the water. So they increased their revenue by 7.5%, and they also renewed their contract with American Express, which helped increase their earnings per share by 28% year over year. So their partnership with American Express, basically, American Express issues a variety of Delta co-branded credit cards and participates in their membership rewards programs. So a lot of you probably see those offers that you get for opening up a new credit card, and you get some sort of like promo, like one free trip or something, or an amount of frequent flyer miles added to your account. So they do something similar to that, and this partnership brought in $3.4 billion of revenue in 2018, which is up 1.7 billion from the year before. Delta also just bought back 1.3 billion of its own stock, meaning the company believes they are undervalued. So definitely a stock to keep an eye on. As you can see, it consistently seems to be beating its earnings reports. It has remained at about $4 billion of revenue each of the past 4 years. It had a very good Q1 here, bringing in just under $730 million. Not bad. And analysts really like this stock as well. Some good buy ratings there. Obviously, you can't go after that too much, but Delta has, in the United States and Europe, represent about 80% of their revenue base, but it's hard to get market share just in Asia because it's so competitive. And typically in Asia, the government is the one that runs the airline carriers, so they're not going to just let other people in. But what's interesting is they do expect to get the most daytime slots at Tokyo's International Airport just in time for the 2020 Olympics. So that's going to be really exciting. And Delta is also taking action to become more efficient by retiring its oldest lease fuel efficient aircrafts by 2021, which will help cut down on operating, fuel, and maintenance costs. So this is definitely a stock to keep an eye out for. It's trading about at its 50-day moving average and 200-day moving average. Hasn't really moved a lot around a lot, but people are definitely thinking that there will be some growth in this stock in the future. And the next stock we're going to talk about is Cisco, which has been doing very well in the past week. As you can see, it shot up a lot here. And Cisco is a company that operates with designing, manufacturing, and selling internet protocol based networking and other products related to the communication information technology worldwide. So they basically make a lot of office products. It's very similar, well, not similar, but it's like Equinix in that it provides a lot of the infrastructure for offices and businesses to be able to communicate with each other, and just a lot of that infrastructure there that you maybe don't think about but is in the background always happening. So Cisco has rose 6.7% since Thursday, and that is because it had a great earnings report when the company beat earnings and delivered a strong revenue guidance for the next quarter. It is now up 23% in the past year, so that's quite a substantial increase. And the company CEO on the earnings call said that the company has seen minimal impact by tariffs. So Cisco now has 5 straight quarters of at least 4% organic revenue growth, and it has a joint project coming up with Google called Anthos, a multi cloud application which is projected to be the largest part of Cisco's business. It will focus on offering application building cloud services to enterprises, and Cisco also reported growth in many of its software categories as well. So overall, it looks like Cisco continues to grow. A lot of its software and different types of services continue to do well. It's a huge company at a $248 billion market cap, has a solid PE ratio of 19.5, so still a decent price. It has a 2.5% dividend yield, and it pays out $1.40 for every share you own for a full year. It's only paying out about half of its earnings to shareholders, so plenty of room for growth, and 8 straight years of dividend increases. It increased it 2% in the last year, so not huge, but could be a stock that's coming up and will continue to do well throughout time. As you can see, has been around for a long time. So that is the second stock to watch here. And then the last stock we're going to go over is going to be quite controversial, I'm sure, but that is, of course, Tesla, which is always on the news, but lately it's been on the news for some terrible reasons, down 17 or 7.5% on Friday. That was a multi-year low that Tesla reached on Friday after a memo showed that the popular electric car company could possibly run out of cash without strict cost control measures. So as a result of that news, Tesla dropped 7%, and Tesla now only has $2.2 billion in cash reserves, which Elon Musk, their CEO, said that will only last them about 10 months if they continue at their current burn rate. So Musk will now approve all expenses, no matter how big or how small, for all the expenses that now come in. So clearly, they are doing some serious cost cutting measures here, and their survival is now being questioned. But I do think that they will continue. They do have a Model 3 that is soon to be available, and that's going to be at a more affordable price for the middle class. It's about $35,000, I think, is what they're targeting. So definitely available for those that can afford their high-end cars, which sell for like $70,000. So electric vehicles are becoming more and more popular in not only the United States but the rest of the world. And uh, Tesla definitely seems to be innovating their technology. They seem to be the leader in that particular segment, and they do plan to have self-driving cars by the end of next year, is what Elon Musk said. At least automated taxis, autonomous taxis. So we'll see how that all plays out. Tesla is at record 5-year lows here. So if you ever wanted to jump into the stock, now would be the time. I'm not going to even bother going over their financials. We all know they're doing not so great, consistently missing earnings reports, and then they lost quite a lot of money. Analysts aren't even that bullish on this stock anymore, but hey, I know people, they invest in different stocks for different reasons. So obviously, this is going to be a high risk, high reward scenario here, but who knows? Maybe Tesla will continue to do well in the future. Of course, we'll continue to be all over the news because Tesla is always on the news. So let me know if you're thinking of buying this stock, and let me know if you agree with any of my other comments or if you disagree, and be sure to subscribe and like the video.